Retail investors cautiously optimistic as we head into the last few weeks of the year. That's according to the latest Investopedia reader survey. But can anything scare this group? Fast Money friend and Investopedia editor-in-chief Caleb Silver is here on set. They sound pretty bullish, actually.
I mean, finding more reasons to believe and staying optimistic, worried about less, even though worried about bubbles in the market. But not unrealistic about future expectations. When we ask them, what do you think about returns over the next 6 months, 6 to 12 months? 5%-ish, 5 to 10%. So nobody's thinking this goes on forever in a crazy way. So realistic, and they've been through a lot this year so far. Yeah,
realistic when it comes to AI, too, because they do see the possibility that there is the B word in this group.
Absolutely. That is their top choice for bubbly assets right now, followed by cryptocurrency, of course. So they do feel the bubbles, yet they're invested in a lot of the stocks that are associated with this, and we're all kind of trapped in that little vortex right now, but they've hung with it, and they were even buying the dip back in November. If you look at the Stacks Index and a lot of the other trackers, individual investors have really kind of hung in there while you've had fund managers and maybe institutional investors backing off just a little bit.
All right. There's a new game in town.
All right.
It's called event contracts. What are the people saying about these things? I mean, because they are literally all the craze right now.
Yeah, this mix up between prediction markets, event contracts, day trading, options trading, cryptocurrency, all slamming together, that is definitely on the minds of a lot of investors. We can see it in what they're searching for across Investopedia, and they're trying to learn the terms that make all of these things apply, because that mentality is definitely becoming more pervasive among retail investors. But still, they are tried and true investors with big, large cap stocks. They've been that way for a long time. They intend to be that way for a long time.
Mel's favorite question, what would you do with an extra 10K? Let me ask you this. Pay down debt is number 6, but if that moves up, is that a warning sign? Because my instincts suggest that if people are focused on paying down debt, something bad is going on.
Yeah, and you can see that bubbling up a little bit more. But what you don't see there is people saying gold. I would buy gold or silver. You guys were talking about that earlier. So that is sort of I should probably do this, but at the same time, I'm an investor. That's why I'm here. That's why they're on Investopedia anyway. So they're ready to buy stocks, individual stocks, with that extra 10
And that's where I'm going. So if individual stocks are the number one thing they do with their 10 grand and CDs are down to 3, is that a function, or do you think there's a relationship between the two? In other words, as rates have come down, does some of this money want to get into the stock market?
Absolutely. And they've done well by saving for the past few years, but they're ready to buy more stocks. And if they have the opportunity or an extra discretionary 10 grand, they would do it. That said, they've been diversified and kind of buying the big stocks all along. So it's not like they're going out on too big of a risk.
Caleb, is this a big difference from what the survey would have looked like in April or May?
Yeah, definitely. We saw in April they were backed off, way backed off, and there was policy uncertainty and obviously tariffs that was on their minds. We're also coming up with our terms of the year for Investopedia this year. We asked our readers for their top term. Of course, it was tariffs, but they were also fascinated with other things that were happening in the markets, especially private markets.